Let's talk about how to elect S corporation status. And in today's conversation, I'll give you the short answer and then the long answer. So the short answer is you need to file Form 2553 to elect that status. So S corporation status, you can see on the screen here. Here is what Form 2553 looks like. And so the thing is that in order to become an S corporation, the corporation must submit a completed Form 2553, and this form is called Election by a Small Business Corporation that has been signed. Now, that Form 2553 must be signed by all the shareholders. Very important, all the shareholders. And so the following information must be provided. So we are talking about the corporation information. So name, address, EIN, date and state of incorporation. So EIN here, we're speaking about your employer identification number. And basically, even if you are a one member or one shareholder S corporation, but you have employees, you still need to have an EIN. You also need to pay attention to the tax year when the election will take effect. So you can actually file Form 2553 this year, and you actually instruct the IRS to actually count next year as your year of effective election. Okay, so you also need to mention to the IRS the corporation's tax year. You also need to talk about an election to treat family members as one shareholder in order to stay under the 100 shareholder requirements. So in some cases, you have the opportunity, if you're a husband or wife, a husband and wife, to actually have a qualified joint venture. So you are treated as one person. You also need to have a contact person for the IRS, usually a corporation officer or the corporation's legal representative, to actually communicate with the IRS. You need to talk about shareholder information, name, address, social security number, number of shares owned or percentage owned, date shares were acquired, and shareholders' tax year. And also you need to have signatures of each shareholder. So the form also provides a way to select the tax year and to certify certain trusts qualify as shareholders. So once that information is complete, the form is mailed or faxed to the IRS, and the address varies depending upon where the principal office of your business is located. And you can also use certain private delivery services designated by the IRS. And then the waiting begins. You generally will know the response within 60 days from the time the IRS receives the application. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So I give you the short answer, right? Now let me give you the long answer. And we want to dial back a little bit to, I would say, S Corporation 101. What is an S Corporation? So S Corporation stands for Subchapter S Corporation, which is really a special status granted by the IRS. And S Corporations pass their corporate income credits and deductions through to their shareholders without having to pay federal corporate taxes. So we're speaking here about when we talk about a pass-through entity, as opposed to double taxation entities, right? So S corporations do not pay taxes at the corporation level. They pay taxes at the individual level when they file their Form 1040, Schedule C. So S corporation is a tax designation, not a business entity type, which means that you cannot incorporate as an S corporation. To become one, you have to apply to the IRS, okay? So S corporation is basically a federally valid tax concept. And so when we talk about S corporation election, it just means that the S corporation election is a request filed with the IRS to change a business's tax status. So when you actually elect S corporation status with the IRS, you are declaring your business as a separate and distinct entity from your personal finances. So after the IRS has approved the election, your business operates under the S Corp status as long as it continues to meet the necessary requirements. Under this status, your business's earnings and losses pass down to all owners or investors, who then report the income on their individual income tax returns. And companies that file as an S corporation do not pay corporate income taxes, as I just explained to you. Now, there are some requirements for filing for S corporation status. So to be approved, your business must meet the following conditions. You got to be a domestic corporation. It must have only allowable shareholders. Allowable shareholders include individuals, certain trusts and estates. Not allowable shareholders include partnerships, corporations, or non-resident aliens. The corporation must have no more than 100 shareholders and must have only one class of stock and must not be an ineligible corporation. And according to the IRS, this means certain financial institutions, insurance companies, and domestic and international sales corporations do not qualify. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to elect S corporation status. Now, how do you actually elect that status? Well, if your business, assuming your business actually meets the requirements that I just gave you, you are ready to file a S corporation status. If you do not already have one, choose a name for your S corporation. You can check with the local and state offices for a list of existing corporations to ensure the name you selected hasn't been used, right? Because the last thing you want is to actually be involved in a lawsuit for IP infringement. You don't want to have all that problem. So you also need to establish and name your board of directors that will represent the shareholders. And you need to file your corporate bylaws with the local Secretary of State office. Your bylaws should include details like how often meetings are held, voting rights, for instance, and if applicable, how shares of stock will be sold. And then you need to file the form that I just showed you at the beginning of this show, Form 2553. And so if you file Form 2553, actually after the due date, the IRS requires you to show reasonable cause for the late election. So this form has 6 possibilities from that the IRS accepts as reasonable causes. You may also attach a separate statement for a longer explanation for the filing delay, right? And so it's one of those things where, in the interest of transparency, you want to give actually all kinds of info, all kinds of data to the IRS, so that everything is clear from the get-go. So the agency knows how to really treat your business. And so once the IRS grants your business the S corporation status, IRS Form 1120S is used to report your company's income, deductions, profits, and tax credits for the year. What I'm trying to say here is that I think I've said this before. Form 1120S is an information return. It is a return where you do not pay taxes while filing it. It's kind of different from Form 1120, which is for C corporation. And for C corporations, you pay taxes while filing this form. But for 1120S, you do not pay any taxes at all. Now let's talk about certain situations where it might be possible to combine S Corp status with an LLC. So if your business currently operates as a limited liability company, you can still apply for the S Corporation election. So having both structures in place actually provides several benefits for your business. So legally, your business remains an LLC, which means fewer administrative duties like formal meetings and reduced record-keeping requirements. In the eyes of the IRS, though, your business is an S corporation with the advantages of pass-through income and no double taxation. And if your LLC business is very active, the S Corp status can provide tax relief for your payroll taxes. And so what do I mean by that? So let me really dig a little deeper here. So when we talk about benefits, let's talk about the benefits of filing as an S corporation. There are several benefits. First of all, you are able to avoid double taxation. So avoiding double taxation is probably the most appealing benefits of choosing to file as an S Corp. So under normal circumstances, corporations are taxed at the corporate and individual levels. So when you file as an S corporation, what happens here is that your business is able to avoid this double taxation. That's what I said to you earlier. So you are able to, your S corporation becomes a pass-through entity similar to an LLC or a sole proprietorship. And so you also have less complex accounting rules. So owners of S corporations without inventory can use the cash method of accounting, which is less complicated than the accrual method. And income is taxable when received, and paid expenses are deductible. Additionally, there are no complicated accounting rules to follow when shareholders sell or transfer their ownership interest. Okay, you don't have to actually follow U.S. GAAP, U.S. generally accepted accounting principles when you actually file your taxes. Of course, if you do not have inventory. You also have transferable ownership. That's another advantage of filing as an S corporation. So in the event that you or any of your partners leave the business or sell shares, the business will continue to run under the S Corp structure without interruption or interventions. The sold shares are transferred to the remaining owners. S corporation status also makes selling the business easier, as any outstanding shares are simply transferred over to the new owners upon the business's sale. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to elect S corporation status. I mean, the big question is an S corporation status right for your business, right? I mean, because I told you before that it's all about really suitability, what we call operational suitability. Yes, of course, you have all the benefits, transferable ownership. You have less accounting rules. You are able to avoid double taxation. You can cover your assets because you are separating the business from your personal affairs. This is totally fine. But the question is it a best fit for you? Now, you need to understand, an S corporation may not always be the best fit for your small business because you have reasonable salary requirements, you have state-specific taxes, and you have strict requirements. Let's dig a little deeper here. So, reasonable salary requirements. First of all, make sure that your business is generating enough income to satisfy the reasonable salary requirements. Okay, and so the IRS actually offers a list of possible factors considered by the courts to help you determine this amount. So when selling on a salary, you should consider training and experience, job responsibilities, time and effort devoted to the business, and how much comparable businesses pay for similar services. And you also have state-specific taxes. Keep that in mind. If you operate in a state that charges business taxes, business income taxes, then you have to really account for those also. And it's important to understand that the states may also have additional franchise or excise taxes applied to S corps, and some states treat S corps like C corps for state tax purposes, meaning you only reap the benefits at the federal level. So it's always a great idea to verify your state's requirements before moving forward with your application. And you also have strict requirements. So S corporation status is not static, right? If something changes and your company can no longer meet any of the IRS requirements for S corporation status, the IRS can revoke S corporation status immediately and tax your business as a C corporation instead. So this can create huge problems around tax time. And so if you expect your company might violate one of the IRS's requirements, for example, if your fast-growing company plans to expand its shareholder base beyond 100 allowed shareholders in the near future, S corporation status might not be for you. Let me give you an overview about the whole conversation about electing S corporation status. It's important to understand that you actually need to look at your situation not only at the federal level but also at the state level because of what I just said. You have possible tax consequences. Now there are some states where you also have to look at the county level or the city level. For instance, if you are in New York, you have New York City, you have state of New York, you have New York City also, and in some cases you might have the county that your business operates from. That could also be interested in having S corporation tax income. What I want to say here is that you need to understand that not every company, every corporation is eligible for S corporation status, right? So especially around the number of shareholders that you have, 100 is the maximum. So you need to really understand that if you have to track shareholder account, and if we get close to 100 mark, then you want to actually either close the solicitation of investors, or you really restructure your business. And also, please make sure that record keeping becomes a priority for your business. When we talk about S corporation, the IRS places a heavy burden of responsibility, if you will, upon the owners, and you want to actually track all expenses. You want to substantiate everything. So if you really want to win the S corporation game and you want to keep your status for a long time, please become a master, becomes a professional when it comes to paper trail or when it comes to record keeping. Another thing I want to say here is that you have to understand how your situation is changing, how your company is changing. If your business situation is changing, then this might have an impact on your S corporation status. It's just better to change things even before the IRS notice any sort of trend. Before closing today's conversation, I want to really explain to you something that's very important, especially when we talk about the first year of election. You need to act quickly to make a first year election. So when you first form your corporation, you have a short window of opportunity to make an S corporation election that is effective for the first year of operation. So the election must be filed with the IRS no more than 2 months and 15 days after the beginning of your corporation's tax year. So if you miss filing during this period, then you have two choices: petition the IRS for a waiver of the rule, or have the election take effect starting in the next year, in the next tax year. So it's one of those things where we see a lot of folks, they're just more interested in having the election takes effect the following year. Another thing I want to talk about here is that, the rules for calculating the filing period are a bit tricky. The 2-month period begins on the day of the month your tax year begins and ends with the close of the day before the numerically corresponding day of the second calendar month following that month. So let me give you an example. So an S corporation will usually have the calendar year as its tax year, but the first tax year will nearly always be a short tax year that begins on a date other than January 1st and ends on December 31st. So the first tax year starts on the earliest of the following dates. So the date of the corporation first interaction with shareholders, the date it first had assets, or the date it began really doing business for real. Example: a corporation begins its first year on January 7th, right? The first 2 months of the corporation's tax year end on March 6th. So the 15th day of the third month in the corporation's tax year is March 21st. So the narrow time between the narrow time to elect S corporation status for the first year begins actually on January 1st, based on this current hypothetical calculation, and ends on March 21st. This is the 15th day of the third month of the corporation's tax year. And so because the corporation has no prior tax year, an election made before January 7th will now be valid. So bottom line here is what? I think I've spoken a lot about how to elect S corporation status, but if you really have the resources and you have the need for some kind of more specific guidance, it's always better to talk to an expert, right? It's always better to talk to an expert, to ask for a specialist, to actually ask for a specialist opinion, to have a clear idea what's really happening here. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to elect S corporation status. Let me do a quick recap here. So I give you a short answer and a long answer, and now I just gave you an overview of the situation. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.